This video exactly tells you how to identify the liquidity and trade from the liquidity point to the liquidity point. So this video goes about the EURUSD strategy which I use in my funded account trade. So first thing first, as we all know, smart money people look the structure in this way. This is completely fake bias. This is completely fake bias. We should use the highs and lows in the market as the liquidity. We should not use the highs and lows in the market as the order blocks to continue the price. If you see here, it is a fake order block created by the banks to induce this liquidity. Here the buys got trapped and their money is taken here because their stop loss will be here. This is how you should think outside the matrix to understand the real movements in the price. So you should understand that every high and low contains lot of liquidity. Every high and low is liquidity in the marketplace. Every high means this high has liquidity, this low has liquidity, this high has liquidity, this low has liquidity, this high has liquidity, this has liquidity. So like this, every high and low in the marketplace is liquidity. Even the structure is bullish, it doesn't mean here there is no liquidity. Even the structure is bullish, we will have some pullback, right? This pullback happens because of the liquidity. And here transactional liquidity will be taken out, and again the movement will be continued. Now this will become the inducement liquidity and it will taken out. Now it will go in the real direction. These fluctuations in the price is based on every time frame. If you see on the 1 minute time frame also, there is no clean structure like this. It is completely fake education given by brokers and educators, scam educators. The real market something moves like this. The real market doesn't have any structure. It just works on the based on the liquidity, liquidity and timing of the banks. The liquidity sweep is happened at the certain timing, then it's very high probable setup. So let's jump into the strategy. First thing first, as I told you, we should always identify the liquidities in the marketplace, right? After this liquidity is taken, the market went short because here the sellers are trapped here. This is the selling order block. The sellers are trapped, and after the liquidity got taken out with some pips, it got aggressively down pushed. Again, there are many examples in this scenario. In this scenario, this liquidity got be taken out, and see this push. See here, not marking any order blocks or structure. I am just using the every high and low is the liquidity. If you see here, this high has lot of liquidity because it is a higher time frame. This has lot of liquidity. If you see here, after this high is taken out, can you see the aggressive push here towards the downwards? Because if the higher the liquidity, the higher the move. Same thing. Same day internal liquidity got taken out. The price reversed. Same day external liquidity got taken out. The price reversed. Here. These vertical lines are called session timings. I use this ICT's session timings. It will indicate the day's highs and lows. I just use for mark the day's highs and lows, the session breaks. See here, the previous day liquidity is taken out and the price pushed up to this liquidity. You should buy here and your target should be here, and you should be sell here and your target again be here. Because this is like the liquidity expands in the marketplace. Suppose if there is a high and low in the marketplace, this is the phase 1 of the liquidity cycle. This is called the phase 1 of the liquidity cycle. Now, if this liquidity got taken out, now we entered to the phase 2 of the liquidity cycle. Now, this liquidity got taken out. Now, after this, we will enter into the phase 3 of the liquidity cycle. This liquidity will be taken out. This is how the range market works. This is how most probably the ranging market works. For the trending market, the market will do this. Fake break of the structure means the smart money people will sell from here. Lot of liquidity. Now we will buy from here. This is how the market is in the 20 days and the 20 days. This is the exact example. So for the Euro USD, when coming into the strategy, we should mark the liquidity levels when coming into that. For example, when we see the backtest from the this week's price action from Monday, we should mark the liquidity levels. Where are the liquidity levels in the marketplace? The only liquidity level when we come into the NY session is this liquidity, because on the London session there is no clear liquidity, right? On the London session there is no clear liquidity from the left. The only clear liquidity is here. After this liquidity is taken, I wait for the 15-minute bullish candle to form, opposite candle to form, and trade this. Buys here. 3.6 pip stop loss makes sense. You can target the next liquidity because it's not high time frame. I also told you the higher the time frame, the move will be higher. The higher the time frame, the move will be higher because it is in the middle of the trend. We should always be mindful in the targets. We should see when coming into the Frankfurt session, we should mark the liquidity level. This is the only liquidity level, right? So here we will be in sales. I pick stop loss, target this next liquidity, and again this liquidity got taken out. As it is the higher time frame liquidity, we should be in the buys at this week. What's our target? The phase 1 of the liquidity cycle is our target. This is our target, 22 hour. Again, when coming into the day, we should mark the liquidity levels. Where are the liquidity levels? This is the one liquidity level, and this is another liquidity level. So I will sell here. I know because the last phase 1 of the liquidity cycle is buys, so these cells are the pullback cells. So I know I will just target here for the pullback cell, 6% gain, and I will back to buys because the high time frame is telling the liquidity is moving. On the high time frame liquidity cycle, it's showing the buys. So I will buy again here at the tip. Stop loss, makes sense. And target again the phase 1. Here, if you are trading the Asian session, this is a valid buy because the liquidity is taken out and mitigated the order block after the liquidity. If you are trading the Asian session, the same thing I used over and over and again in the marketplace. Nothing new stuff because it happens every day. The liquidity cycle happens every day. And again, here, what the stuff happened? The higher time frame liquidity got taken out. So the sells are very high probability. You can sell the market from here. Again, the sell scale. What's your target now? This phase 2 liquidity. After this liquidity got taken out, we should switch to the buys because the high time frame liquidity is telling the banks are trying to push the market up. Simple scenario. If you see here, this liquidity when we are trading the Asian session, this liquidity when we are trading the London session. So just mark the liquidities.